All right, guys, it's Brandon Lucarin here, and today I want to talk to you guys about some of the benefits that the government gives us as real estate investors. And this is really important to understand. First of all, I will preface this by saying I am not a tax accountant, I'm not a real estate attorney, so please consult with your professional before you take my advice. I'm just showing you guys some options here that you could go ask your professional. So definitely consult with a professional. This is not advice in any matter. So as a real estate investor, the government offers so many benefits, right? And a lot of it revolves around taxes, because the tax code was written for two people, and that's business owners and real estate people that own real estate. And you can tell that because people that own business, they're constantly being accused of not paying taxes. And really, the people that are accusing them, the accusers, they either want something for nothing, or two, they generally don't understand how this all works. And if they would really just listen and they would really go out and actually, build a business or go out and buy real estate, they will see the benefits that real estate and being a business owner brings. And really, it's kind of like one and the same. A business owner is a real estate owner. Real estate owner is considered a business owner. So these things are really cool. So number one is going to be mortgage interest deduction, right? So mortgage interest is all about the deductions, right? So for instance, right now, if you bought a house, like when interest rates were low, you could probably deduct most of the interest on the house at, $750,000 or so based on the amount. Now, there are limits that apply to these interest write-offs, but basically the money that you pay every single month on interest, that is fully tax deductible, right? And this all has to do with really the number one rule, in my opinion, of real estate is you do not pay taxes on borrowed money. So interest is also something that is not taxable. It also really helps you during your tax time because you're able to write it off, and it's great. So that would be number one. Number two is taxes. So as you guys know, each property, each county has a tax rate, and those taxes are in addition to your mortgage payment, right? So your interest and taxes, right, those things are fully tax deductible. Your property taxes generally, it's typically capped around $10,000. Again, don't quote me on this, but if you're filing jointly, so that's another thing of being married is when you're married, you're able to get additional benefits than you would not have normally been able to get. But you are able to deduct your property taxes, where most people that don't have properties, they don't really have those deductions, right? And yes, there's some cost to that, and people could argue it may not be a benefit one way or another. But then we get in, so number two was essentially taxes, right? Property tax. Now we get into the serious things, right? So there's something called capital gains. What is capital gains? So in the event that someone makes money on an investment, and real estate is considered an investment, they are taxed what's called capital gains tax. Now, capital gains is simply if you own the property, if you sold a property, if you own a property for 2 years and you lived in it and you sold it, you have to pay capital gains taxes if you made money on it. Now, if you owned it for more than and lived in the property for 720 days out of the past 5 years, then, and this is, again, guys, this code is written on the IRS website. You guys need to do some research. Get on the IRS website. It is public information. Get out there and read it because it's going to really help you, especially if you're a property owner. But let's say you own a property for less than 2 years. When you sell it, you're going to have to pay capital gains taxes. Now, if you owned it for 2 years or more, meaning that you lived in the property for 720 days, which is about 2 years, and notice that it says days. Again, not tax advice, but it says days. So if you are, overseas and you're coming home for a little bit and it adds up to be 720 days in the past 5 years, then technically that's a primary residence. And then you would be, quote unquote, tax exempt. So basically what you could do is avoid capital gains taxes here if you lived in the property for 720 days or more and you sold it. So again, don't quote me on this, but when selling a primary residence, homeowners can exclude up to $250,000 of capital gains from their income. Or, again, if you're filing jointly, if you are married and you're filing jointly, it's up to $500,000, right? And you have to have lived in the home for the past two out of the past 5 years. And again, the IRS code says it in days. It doesn't say it in years. It doesn't say that you have to live there consecutively. Again, don't quote me on this, but consult with your professional. But it could significantly reduce your tax burden, especially when you're selling a home. And it's a massive incentive. It's probably one of the best ones that you could get, especially as a homeowner, as a business owner. So this is capital gains, right? Now, the next thing, number 4 reason, is 1031 exchange. Now, let's say you have an investment property, and what a 1031 exchange is, it's simply you rolling over the tax bill. So if you've ever been down to North Carolina, South Carolina, and you see those homes on the Outer Banks that are worth like, $6, $7, $8, $9, $10 million, and you're like, man, that's a beautiful home. I'd love to own those. Believe it or not, a lot of them are owned by LLCs, and what happens is people build up their equity and build up so much money, and they don't want to pay taxes on it, that they're forced to kind of dump it into something else. So what a 1031 exchange does, let's say you own an investment property, you sold that property because it's an investment property. Technically, you are supposed to pay taxes on that. Now, depending on the long term, how many years you own that property, you would have had to pay short-term capital gains tax or long-term capital gains tax. And both rates vary. Short-term is based on your income, and long-term is based on really what they say it is, depending on, administration and whatnot. It's between 15 and 25% usually. So long-term is really good, but let's say you want to do that tax deferred. So you got $1 million building, and you just sold it. You made maybe $500,000 on it. You would have had to pay long-term capital gains taxes. And if you don't want to do that, you could do what's called a 1031 exchange. And a 1031 exchange allows you to bring in a company. They get the proceeds from the sale of the property, and then you have a certain period of time in order to find another like investment or larger investment to put that money in. And it's really cool because then you don't pay taxes on it. Now, I will tell you guys, if you touch $1 of this money, then you are going to owe taxes on the entire amount. So this is why it's best to get like a 1031 exchange company in, so then they could do the handling of the funds and you don't touch it. It doesn't show up in your personal bank account, because it's not like you could show it in your personal bank account and then say, no, I did this 1031 exchange. No, you actually have to get a 1031 exchange company. And this is really cool because, as you can see, as you sell properties and as you move up in the world, maybe you bought a $2 million property with your first 1031 exchange. And then your next property, $3 million, and you paid it off, $4 million, $5 million. And you see how quickly it can get to a massive amount to where, man, I got to exit this thing, right? So let me dump it into something. So it's sort of like you kicking the can down the road based on taxes, and it's a great way to, great utilization of real estate to be able to do this and avoid taxes on it. With this, again, you don't pay taxes on borrowed money. So if you refinance properties, you continue to get these benefits. So I'm going to make that number 5. So number 5 is, let's say you own a property. No taxes on borrowed money. Right? Hopefully you guys can understand my writing. But let's say you own a property and you do the burst strategy, which is like my favorite strategy, right? So with the burst strategy, because you essentially, here's your house, and you bought it for, let's call it $1 million, right? Let's say, it's worth about maybe 1.5, right? $1.5 million. Well, what you could do is actually, let's say you bring it up to value, it's rented, you've had it now for 2 years. What you could do is take $1,500,000 and times it. Let's say the bank is willing right now, we're seeing DSCR loans go up to 70%. You are able to go back to the bank and borrow 70% of that, right? Which gives you $1,050,000. Right? Well, guess what? You bought the property for $1 million. You would have had some down payment on there. You would have put down about $200,000, maybe $250,000. You would get back that plus $50,000, and this is obviously high level, not including any closing costs and whatnot. However, as you can see, this $50,000. So you made $50,000 right? Guess what? That $50,000 is not taxable because it's borrowed money. You borrowed that from the bank. So that money came from the bank, and that's why it's really important. This is how you pay no taxes on real estate, especially with the burst strategy. You just continuously borrow money. This is what Elon Musk is doing. This is what Cardone is doing. All these big guys that you feel like don't pay taxes, for you people that feel like rich people are bad, which they're not, this is what they're doing. And you can do this too. And this is what I'm saying is, don't be angry. Learn what they're doing and figure it out, and you guys can do it too. So this is a great way to make money in real estate. It's a great way to not be able to lower your tax burden. Anyways, I'll see you guys on the next video. Hit the subscribe button below. Maybe I'll do a number 2 video on this because this is a lot of fun for me. Love talking about the benefits of buying real estate. Hit that subscribe button below, like, follow, comment, and let me know what your thoughts are. See you on the next one. Take care.